You know that the US dollar in general will lose 7% of its purchasing power against scarce desirable resources every year forever, right? Once you understand that idea, then you look at Bitcoin, it's 60% ARR, 60 vol for the past 4 years, for the past 10 years. I mean, is 10 years enough, right? After 10 years of it doing that, or 4 years of it doing that, is that enough? You can be, you can be pessimistic and conservative and say, well, maybe it's only going to be 30-30 vol, 30 AR, 30 vol. Okay, well, so cut it in half. It's still double the S&P index, which is 1515. These are all straightforward numbers, right? If you have twice the performance of the S&P index and twice the volatility of the S&P index, your options are twice as valuable, actually more than twice as valuable, but the equity is more than twice as valuable. I mean, everything's just twice as good.
As the US dollar loses 7% of its value annually against scarce resources, Bitcoin shines with an impressive 60% annual return, ARR, over the last decade, despite its high volatility. Even when halved, Bitcoin outperforms the S&P 500, offering double the returns. Michael Saylor calls Bitcoin the ultimate risk-free asset, delivering unmatched growth opportunities. Stay tuned for his insights, and don't forget to like and subscribe for more finance updates.
The cost of capital in the conventional economy is the S&P index. It's like 15% in the last 4 years. In the Bitcoin economy, it's 60%. If you can borrow money for 3% or 4% or 6%, if it's not going to be marked to market, if you don't have to pay it back for a decade, okay. I think that ironically, those are the safest kinds of strategies, right? I mean, and that's what I've done at MicroStrategy, right? I mean, so we borrow $7.2 billion at no recourse, unsecured, about 4 to 5 year duration, 42 basis points, so, it's effectively free money.
Yeah.
No strings attached. In 5 years, I have to be right on the trade. But, so if you were 20% levered, if you had $1 million of Bitcoin and you could borrow 200,000 at 1% interest, for 5 or 10 years, I mean, that's not a bad idea, right? Now you've got 1.2 billion worth of Bitcoin and the cost of debt is free. So I would start by evaluating what are your sources of cheap capital, because a lot of fiat capital there was a point, I think, when the 30-year euro swap rate was like 20 basis points. It'd be like they were just insanely cheap, interest rates. So if you can get cheap capital and you can buy Bitcoin and you can hold it more than 4 years, it probably makes sense. If you can hold it 10 years, it's a no-brainer.
Yeah.
When you look at companies, MicroStrategy, other companies on the Bitcoin standard, they're investments, Julian, right? So read the prospectus, study the filings, right? I think we have a good capital structure right now, but the point is, don't take my word for it. Look at it, think for yourself. A lot of people don't really think. They're like, oh my God, MicroStrategy is going to get liquidated at Bitcoin. It's like, well, dude, no, Bitcoin could go to $1 a Bitcoin. We're not getting liquidated. We're just going to buy all the Bitcoin. If it goes to $1 a Bitcoin, then it's going to go back up again, right? But people just say things. They're like, well, I heard you have some leverage, and so therefore there must be a liquidation price. But it's the same people that they look at, BTC yield. They go, oh, well, that's not really yield. I mean, did you even read the one-page 8K? Most of the people that just go free, they won't even read one page. Like, they can't get through 2 paragraphs of text, much less 20 pages. So if you're the kind of person that can't read 20 pages of investment filings, you probably shouldn't invest in stocks, and you probably shouldn't invest. You should just buy Bitcoin, put it in cold storage, and go to sleep for 30 years, and you'll be fine, right? But if you're an investor, if you're a public company investor and you're willing to read hundreds of pages of legal filings, then you could decide whether you want to invest in one of those companies. They all have more risk. They all have counterparty risk, mine, everybody else. But of course, the point is you should do it because you expect more reward, And again, here I make the point. If you literally run a hedge fund and your job is to invest billions of dollars of capital in public companies, that's actually what you have to do. That's your job, right? You're not allowed to invest in Bitcoin. A lot of times people say, well, why do people buy MicroStrategy instead of Bitcoin? Well, it's because it's literally illegal. They'll get fired if they buy the Bitcoin. They can't, right? Mm-hmm. And so people miss the obvious point. There are large pools of capital. If you're a venture capitalist, you got to invest in a company that offers you private equity. If you're a public market investor, you have to invest in a public company. If you're a commodities trader, you have to invest in commodities. If you're a convertible bond arbitrager, you have to invest in convertible bonds, right? That's literally what your job is. When you raise the capital to do that, that came with strings attached. Mm-hmm. The strings are you have to use it this way. If you break the rules, maybe I sue you, maybe I fire you, maybe you go to jail, maybe I take the capital back. And so the people in the crypto Twitter ecosystem, sometimes they don't really understand there's $500 trillion of capital and it's sitting in silos and the capital has to be deployed in a certain way. So my advice to a private investor is if you're not the smartest person in the room, if you're the smartest person in the room in the market, you know you are. Trust me. Like when I'm the smartest guy in an industry, I know I'm the smartest guy in the industry because I know every single other actor in the industry, and then I will actually move aggressively. Mm-hmm. But I stay in my lane, and if you invite me into a poker game of a lot of stupid, dopey-looking people in the back room of a casino, and I'm not, I don't know any of them, and they all start betting big, I'm not the guy that thinks I'm the smartest guy at the table, right? I'm thinking maybe if I think I'm the smartest guy at the table, that's because they wanted me to think I'm the smartest guy at the table. So you ought to stay in your lane, and if you're a public company investor, you know that you are, and trust me, they're pretty smart. Mm-hmm. And if you're a private equity investor, if you're a venture capitalist, then you're going to want to invest in companies that are ideally on the Bitcoin standard, right? And you would, if I was a venture capitalist, I would go looking for a company that's a private company that has a Bitcoin-backed treasury, and then I would make a private investment in them for preferred stock, maybe Bitcoin preferred stock, and I would say, here's $100 million. You have to buy at least 90 million of Bitcoin and not sell it. I want first lien on the Bitcoin. You can do whatever you want with the other $10 million, and you give me X percent of the company. And then hopefully you go public in the next 24 months, and then their company will be valued at 3 times or 4X the multiple it is right now, and we're all going to make a lot of money.
In December 2024, Bitcoin ETFs surpassed gold ETFs in U.S. assets under management, achieving in under a year what took gold ETFs over 2 decades. With a capped supply of 21 million coins, Bitcoin is solidifying its position as a top inflation hedge. Major players like BlackRock and Fidelity backing Bitcoin ETFs are boosting investor confidence. Now let's hear more insights from Michael Saylor.
Once you understand Bitcoin, you understand, what are you going to do with my money? I'm going to invest it in something that loses 10% of its value every year. That sounds repulsive. What are you going to do with my money? I'm going to invest it in something that increases by 45% every single year in value. That's attractive. The world is just waking up to this idea that you can either be repulsive to capital or attractive to capital. But if you look at the history of the human race, it's like, I give you fire or you can freeze to death and starve to death. I give you electricity or you can, have slaves turn millstones or use donkey carts, right? I give you a plane or you can get in a Conestoga wagon with horses and take 6 months to try to cross the continent. I give you a nuclear reactor. It's like unlimited, clean, infinite power, or you can burn coal in a stove or burn wood in a stove. It's a very simple concept. It's just better technology. Do you want to power your company with a crypto reactor with Bitcoin as the fuel? Or do you want to power your company with a wood burning stove that, stinks up the house and leaves you with choking fumes? Chop down all the trees in the forest, right, in order to power your village with a bunch of wood burning stoves. It's not that complicated as long as you open your eyes. The actual metrics in the market are, to make it simple, is if you're holding the US dollar on your balance sheet, it's zero ARR, zero volatility against itself, right? Like you hold the dollar for a year, it's zero volatile, it's going to go up zero. And you know that the US dollar in general will lose 7% of its purchasing power against scarce desirable resources every year forever, right? Once you understand that idea, then you look at Bitcoin, it's 60% ARR, 60 vol. For the past 4 years, for the past 10 years, is 10 years enough, right? After 10 years of it doing that, or 4 years of it doing that, is that enough? You can be pessimistic and conservative and say, well, maybe it's only going to be 30 vol, 30 ARR, 30 vol. Okay, well, so cut it in half. It's still double the S&P index, which is 1515. These are all straightforward numbers, right? If you have twice the performance of the S&P index and twice the volatility of the S&P index, your options are twice as valuable, actually more than twice as valuable, but the equity is more than twice as valuable. Everything's just twice as good. It may be, and over time it becomes infinitely better because that twice as good this year compounds exponentially. So there's trillions of dollars indexed to the S&P 500. If I give you a security which is twice as good, how much capital do you think I can get? How much do you want to buy? Right? You're a rich man and I'm selling you a security which returns 1/3 of the performance of the S&P index. How many of my securities do you want to buy? None of them. Now I give you a security which returns double the S&P index. How many of my securities do you want to buy? All of them, right? All of them, meaning I will buy up to the limits of my risk mandate. Like if I have $10 billion and you have an equity which returns on a risk-adjusted basis twice as much as the S&P index, if your Sharpe ratio is better, I'll give you $500 million in a meeting. Now, if it's half as good, I'll give you $0 in a meeting. It's a very simple idea, right? Which is you want your company to outperform the hurdle rate if you want to attract the equity. And if you want to attract options traders, like if you look at Bitcoin options, they trade with 60 vol. Everybody wants to trade them. MicroStrategy trades with 120 vol. We have $100 billion plus options market on MicroStrategy stock. The bond market, BND, if you look at that index, it's just a bunch of corporate bonds. There's no options market on it. It's 5 vol. Why would you want to trade 5 vol? Like there's no optionality in it, right? And so at the end of the day, if you have 60 ARR, 60 vol, that's like I'm on a train going 60 miles an hour through Europe, and I have a flywheel, a 10-ton flywheel, and it's spinning at 60 RPM. You're an engineer. Okay, that's energy. That's energy. You can tap that energy. And now there's a US dollar standard company. They have $10 billion in capital. That's like a normie standing on a plane with a 10-ton statue next to him. The world is flat. He's not going anywhere. And his capital is just a statue to look at. You understand the difference between having a 10-ton flywheel moving 60 miles an hour versus a 10-ton statue on a plane. And so, like, here's the big idea, Julian. You can transform the 10-ton statue into a 10-ton flywheel that's moving 60 miles an hour. Why wouldn't you?
Michael Saylor emphasizes that Bitcoin's superior performance compared to the S&P makes it an irresistible choice for investors, offering dynamic growth and unmatched potential. Before you go, subscribe to my daily 5-minute crypto newsletter for expert insights, breaking news, and top-on-chain analysis, trusted by 50,000 plus readers. Link in the description. Thanks for watching, and see you in the next video.